one tenant moves out of one side, you still have the other side paying the rent. I don't care how tired I ever am in life, I always have another gear. Don't get too high and don't get too low. If you're considering getting into investing, just do it. Challenges come, but then they go, and just keep fighting on.
Welcome to the Deal Flow podcast. I'm Michaela. We help real estate professionals grow in their business using AI and smarter systems. Today, I'm joined by Jay Peterson, managing broker of Westview Properties, real estate professional with more than 20 years of experience. Today, we're talking about investing, rental properties, building wealth through real estate, and how technology is changing the industry. Jay, welcome to the show.
Hi, Michaela. It's great to be with you today. Thank you for the invite.
Yeah, thanks for joining. Jay, so you're actually one of the very few people working in the same field you studied in college. Why don't you tell us a little bit about your background and how you got started in real estate?
You bet. So, my family has some real estate in its background. For instance, my great grandfather, who my middle name is named after his last name anyway, he was a developer up in North Dakota in Bismarck. So, big developer of an area up there called Highland Acres. And then my grandfather was involved in some oil and gas and things like that. But then my brother became an affordable housing tax attorney. And it wasn't that I initially dreamed of being a real estate broker as a young child. In fact, in my middle school and high school, I thought I'd be an architect. But as time went on, I just realized, I think I wanted to be more in finance. And so I was going to Colorado State University with a degree in finance, but then found out that I could add on a dual major with real estate by only taking 3 additional classes. So I figured, why not? Let's do that. And so, but out of college, I got my Series 7 license. I was a stockbroker out of college for about 7 years. But while I was a broker, one of my clients was an very active investor. He was a guy a little bit younger than me, but he's literally the person that talked me into buying my first real estate property. So that's a real estate investment property. And so that's how it all started, was from there. But yeah, I guess I'm probably one of the few people that people meet that actually do what they studied in college. Because
Yeah,
a lot of my friends don't.
yes, for sure. I can relate to your friends.
Yeah.
Awesome. So out of college, you said you spent the first years as a stockbroker, and then you worked in, I think you mentioned in our previous call, home building data and analytics. Looking back, how do you think those experiences shaped the investor and broker you are today?
Yeah. So I work for a company that they're a national company based out of Washington, D.C. And I worked there for about 7 years and really got into the home building market as a whole. And it was interesting. Met a lot of really good people in the industry. Was involved with the Home Builder Association. Sat on one of the committees. But as time went on, I just kind of realized, gosh, I want to be at the other side of the table. I want to be doing the deals that they are working on. And so I got my real estate license in 2007 with the intent that I was going to help broker land deals to a lot of the home builder contacts that I had, particularly land acquisition people. And then incidentally, while I was at that firm, I was actually trying to bring on my business partner today, who worked for Colliers as a broker. And he also worked in land. And I was trying to get him to his company, Colliers, to buy our software at the time. But we both were, well, he wanted to leave Colliers at the time, and I was just getting my real estate license. And so then he moved over to a smaller firm here in Denver. And then I hung my license with this guy for about a year or two. But unfortunately, in 2007, that was the peak of the real estate market. And so everything was basically going down and home builders were shutting down. And it was just a financial crisis from 2007, 8, and 9. And then from there, my business partner, Brad Ulick, he and I got the opportunity to work on a portfolio sale for a housing authority in West Denver Metro. And so they were selling all their properties. It was 95 at the time, with the intent of building new property and then using tax credits to ultimately have a larger portfolio of units. And so through a lot of work, through the RFP that Brad worked on, and then just a relationship building that I had with the housing authority director, we were competing against firms that were probably certainly well more apt and experienced at doing this than we were at the time. But the key, like anything anybody in business can relate to, is building relationships. And that's what I did with that executive director. Just really became good friends with her and hung out with her and a lot of her colleagues that were other executive directors here in Denver. And I kind of related to them as a fraternity because they hung out together all the time, whether it was at different events here in Denver, or I went up to Vail a few times at some conferences that they had. But that's the key, like anything, is building relationships. And so with that, we won the portfolio, and from there, that's what really kickstarted our business from initially trying to be land brokers to now diverting over to multifamily. And we were busy with that for a couple of years. We sold over 50 duplexes and 23 single family homes and saw, I think, about 10, 6 to 12 unit properties. And from that, just built up a pretty large portfolio of clients that were investors at the time. It worked out great for our clients. It worked great for us because we made good money on it, but it also afforded us the opportunity to buy a couple of their properties, which I bought two of their duplexes on top of what I already had. But it was just a great time to buy, and rents at the time were about half of what they're at today. And, just like in your market in Austin, Denver went up like gangbusters for 10 years. We grew by a million people and our values went sky high. Our rents went up dramatically. And so it was a true blessing at the time to get that portfolio. And it really got Brad, my partner, and I, our business just rocking and rolling. And that's really what we focus on today is from really single unit properties, but really more focused on duplexes up to around 10 units. That's kind of our focus.
Okay. Do you feel like those first properties and units that you guys were selling, it was a lot of learning on the job? Did you have any mentors that were helpful at that time?
I was really kind of leaning more on Brad because I had just got my license and I was still wearing my hat at the former company called Hanley Wood Market Intelligence, doing the data sales for builders, while Brad was working on our portfolio of sale of multiple properties. And so he already had experience and he's a bright guy. He was an engineer out of college, has his master's. And so he's a very structured person. So he did very well handling that. But then I ultimately joined him full time, which was the right thing to do. And I guess what we learned from it was we didn't know a whole lot about Section 8 at the time. And so the properties that we acquired and the properties we sold to our clients were basically transitioning from either public housing or existing Section 8 tenants where we could acquire these Section 8 tenants and same with our clients and just hold on to them. It ultimately helped us understand the value of Section 8. You're not just helping people that need a place to live, low income people, but from a landlord owner perspective, it is a stable source of tenant base because you're generating most of your rental income from the government or HUD, about 70 to 100% of it. And most of these tenants stay. They're stable. They don't want to move their kids around, continuously. And of course, we've heard of, the horror stories from clients that are landlords that would not prefer to have Section 8. And I get it, but there are tough tenants in any kind of asset class, whether it's Section 8 or a home that rents for 4,000 a month. I've had clients that have had really nice homes in nice parts of Denver that a troubling tenant can all of a sudden leave and now they're stuck and not making their 3 to 4,000 a month, anymore. So that can be tough. So yeah, that's what we learned is a lot of was really getting entrenched in the Section 8 uh, industry itself.
Interesting. So when you and your partner built West Peak Properties, you mentioned you focused on investors. Was that the vision when you guys first started, or did that just transition as time went on?
We really didn't know what we were going into. I mean, when I got my license again, I was planning on just working with home builders and developers, and Brad had that focus as well. I think there's a good motto out there that things happen for you, not to you. And that's really what happened to us is that portfolio was awarded to us and it allowed us to now focus on something that I don't think either of us really had planned on going into as far as multifamily brokerage. And so that really has been good for us because we also are investors ourselves. So not just the triplex that I bought out of college, but the duplexes that I acquired from the housing authority and some other properties I've acquired since then is that Section 8 has been, they're not all of my tenant base, but they're a good portion of it, probably 70%. And same with Brad, my business partner. A lot of our clients kind of have a mixed bag of Section 8 and not Section 8. But ultimately, I would like to 1031 out of a couple of properties and maybe get into a 10 unit or 20 unit. But I don't want to ruffle the feathers too much because I think what I have has done very well and comfortable with it too.
Awesome. So, one thing that stood out to me is that you bought your first multifamily unit after graduating college. What gave you the confidence to invest so early?
It's a good question because what gave me the confidence was my client when I was a stockbroker at the time. My client was a heavy investor in an eastern part of Denver called Aurora. He owned a bunch of units out there, and I think he owned a couple of apartment buildings at the time. But he was a real estate broker and a mortgage broker, so he handled both sides of my purchase of that property. And this is back in the day. I bought it in 1998, and at the time, the MLS was literally like a phone book. You just had to page through the book until you're looking through all these properties. So that's what he did. He gave me his MLS phone book. I went through it, found the property that I bought today, but I was looking at it and I said, "Hey, let's go look at this one tomorrow." And this is when the market was it was pretty hot back in the day. And he said, "If we're going to look at it, you got to put earnest money on it tomorrow." I said, "I don't even know if I want to go, if I even want it." So we went and looked at it, and it was outdated with the kitchens and bathrooms and such, but it's in an area of Denver called North Congress Park, which is pretty close to downtown, close to Cherry Creek. It's a very central area, close to a big park we have called City Park. And I just figured, you know what, over time, this is not the best area, but over time it'll improve, I'm sure, at some point in my lifetime. And it dramatically has. It's done very well. And I have a good tenant base there. But yeah, it was definitely concerning putting down, I think I only had to put down $5,000, which isn't a whole lot in today's standards. But for me back then, buying my first property, yeah, it was a real nail biter for sure. But I just was kind of going off the experience my friend Warren was doing. And that really helped because it gave me trust and confidence that, you know what, if he can do it on multiple properties, I can do it on one.
Yeah. Well, that's great. And it sounds like it was a quick decision, but well worth it.
Well worth it. Yeah. And that's what I tell investors today. It's like, you know what, if you're considering getting into investing, just do it. We try and divert clients from doing condos or single family or townhomes because in today's numbers with the higher prices and higher interest rates, they don't pencil. I mean, they're literally negative cash flow on most properties. And so we really encourage them to do duplexes because if one tenant moves out of one side, you still have the other side paying the rent, which covers most or all of the mortgage. That's where we try and help newbie investors is encouraging them to either do a duplex, triplex, or a fourplex, depending on their financial situation, how much they can put down and what they can afford. Yeah, that's where we try and start.
That makes sense. And that's great advice. So, a lot of people are interested in investing, but never take action. What do you think holds people back?
It's the fear of the unknown. The three T's of the tenants, toilets, and trash scare people. But to be honest, I have 17 units and my phone doesn't ring off the hook. And the reason is, unlike properties that we see a lot out there, is my business partner and I, but particularly with what I have in mind, is we take care of the properties. If a tenant moves out, we're always in there rehabbing it, trying to get it to a good quality standard and make it livable because we want the place to be as nice, if not nicer, than most of the competition in the area because we don't want the tenant to move. But beyond that, there are different things to monitor and fix, whether it's getting your sewer line cleaned once every couple of years or just monitoring your furnaces and your boilers, HVAC, and all that kind of stuff. But I guess getting back to your question is if you're considering it, just know that, again, on multifamily or residential real estate, as opposed to industrial, commercial office, or whatever else, if you're doing residential, everybody needs a place to live. And of course, it's all about location. Everybody knows that motto, but because the location itself can either make you a lot of money or it can give you a lot of headaches. And what I'm referring to is, again, if you're kind of a newer investor, consider buying in what we call B or C locations. C, try and stay away from the areas where you would think there might be a lot of crime or just problems. But What we have had good success on are areas that I would consider like more workforce housing, where the properties are a little bit less expensive, but your returns are going to be better, like your cash and cash returns, your cap rates, things like that. But you want to make sure that whatever you're putting down on the property as far as your down payment, and that's what we help clients do. We help run the numbers through financials and say, okay, your rents are currently at this, but they could be up to here. And if you just improve the property, and sometimes properties don't even need improvement. It's just the owners don't maximize what the rents could be. But it's really getting with a broker or somebody who can help you run the numbers to analyze the property, not just on the current numbers, but what they could be. And then are you going to cash flow in the property? And obviously, there are two different buyers out there. There are owner occupied buyers that live in one of the units, or there are investors. And so on that's what I do with my triplex. I was an owner occupied buyer. I lived there, I moved in, but it also offers you a lower down payment. You could do FHA or some other kind of programs out there that offer less than 20% down. And then as an owner occupied buyer, all you're really looking for at that point is you're looking just to get as much rent as possible to help offset that mortgage. And so I lived in one of the units with a couple of friends. I guess you consider it house hacking, but then I was renting out the other two units. I was there for quite a long time. And just over time, the appreciation went up. But also the nice thing is that as rents went up, and I always tell this to newer investors, the quality of your renters also go up. And so you typically will have less problems, hopefully, as the quality of renters go up as well. I had some issues in the beginning because I didn't know what I was doing, and I wasn't checking the background, particularly with one guy. I didn't check his background very well. And so I was just happy and excited to get somebody into one of my vacant units. Well, over time, he didn't pay his security deposit. And by month three, I was going through having to go through an eviction. So the key is just being very diligent with running your background checks. And if you don't know how to do it, just get with people that know how to do it and who have experience, whether it's a family friend or a broker or whatever. And there's people out there to help you. But the key is if you're interested in doing it, just consider jumping into it. If you really can only afford a condo and if the numbers make sense, then do it. Just get your feet in there and get some experience. And the other thing too that I mentioned to newer investors is I know it's appealing to just turn the property right away over to a property manager. And my advice to that is consider trying to just manage it yourself for the first year or two. And why is that? It's because issues come up. They always do. And I'm not saying it happens a lot because I'm not trying to scare anybody away. But if you have a garbage disposal that breaks down or you have a water heater that needs to be replaced, you don't need to pay your property manager $300 to replace a garbage disposal or $4,000 to change a water heater, which it's a real example of one of my client friends that happened to a couple of years ago, is that when you manage your own properties, you build your list of your own contractors from plumbers, electricians, sewer companies, and on, handymen, is that over time, you know what things ultimately are going to cost based off your experience. And so ultimately, when you do turn it over to a property manager, you have that experience and kind of some knowledge as to, hey, no, it's not going to be a $4,000 water heater change. Let me get my contractor out there to do it. And oftentimes, property managers are willing to work with you on your own contractors as opposed to send someone out. At least our property manager does. I don't know if it's the case with every property manager out there. So I'm just going from our experience on that.
Yeah, and it's interesting how important relationships are, like you said, building that network, because it seems like it just helps out in all the aspects throughout the process. And also, you gave the listeners a lot of great advice on things to avoid as a first-time investor.
But yeah, that's what we do. I mean, we're here. I mean, our motto on our website is helping clients build wealth through investing in real estate. It's pretty straightforward, but you know, the key is just getting in there and doing it because you wouldn't realize over time how real estate can just build your net worth. And what I tell newer clients as well, and obviously seasoned investors who realize this is, y- we oftentimes we focus just on the cash flow or what could the appreciation rates be. and you obviously get a depreciation write off in your mortgage if you use a mortgage. So there's multiple benefits to owning real estate, but a big one out there is over time, who's paying your mortgage? Your tenants. Your tenants are paying your mortgage off. So you're getting an automatic return right there as well. And so, and I use the principle of aggressively paying off each mortgage that I have above and beyond the current payment because you can shorten that 30-year mortgage down to whatever, pick a number, 20 years, 25 years, or however aggressive you are. But that's another return, automatic return is having your tenants, they're paying the mortgage out for you.
Yeah, that's something I think people forget, and then also you mentioned house hacking as well, so those are some great tips that I've been hearing for people that are investing in properties for sure. And because you own properties yourself, I think it's great that you're not just advising clients, you've lived it, you deal with the same things they're going through. Would you say that experience helped you better serve your clients and their experience?
Yeah, yeah. We literally have had clients say, "I'm so glad that you guys own your own properties because I've worked with brokers before that do not." And why does that help? Well, it's because we're not just here to do a buy sell transaction. We're here to help them after as well. I mean, many of our clients become our friends and we talk to them on a regular basis. And ultimately on the brokerage side, we're not just negotiating the price in the beginning, but a big part of it is the inspection. The inspection process can be any number of things that come up with the property. And because we have our trusted contractors we work with on our own properties, we get a lot of the quotes or we have our contractors inspect these properties that we're brokering at the time to see what the issues are. And they'll oftentimes beat the bids. Let's say on the listing side, we'll get a bid from a buyer agent who got a furnace quote. In fact, this just happened in the last month on a 6 unit that I closed where the buyer agent got bids for four furnaces at $5,000 a piece. And yet we have a contractor that could do them for 2,500, so half. And he does everything legit. He pulls permits. I mean, there's nothing shady about this, but that's the advantage of us owning our own properties is just being able to have that value add of experienced contractors that we work with that we know and we use on our own properties. But these are trusted people. And so there's that aspect from the inspection side, but then also we're in the trenches with you. And when we're evaluating properties for a client, we often know what the rents should be. And if the rents are low in the market, we know based off whether they're non Section 8 or Section 8, what they could be in a certain market. And so then that helps us run our financials for clients when they're evaluating a property. Does it make sense or does it not? Do I move forward with this property or go on to the next one?
Yeah, that's great, and what a big difference, on the furnaces. Just knowing that pricing saves you a lot of money. So
A lot of the time, it's the inspection part is the biggest hurdle generally when you're going through a brokerage transaction, and that can absolutely make or break the deal. And sewer lines come up semi frequently, and they're very subjective a lot of the time. Where the buy side is saying, "Well, you got to replace the whole sewer," and then we'll use our trusted sewer inspector. And he says, "Well, no, it may have a slight bend or an offset or a crack, but it's still serviceable," things like that. And I've salvaged a couple of deals just by some trusted people we work with on the sewer side. We have a great electrician that's helped us save some deals, and so there's really a benefit to owning property when you're a broker, for sure.
yeah, that's great. So you wear a lot of hats. You're a broker, you're an investor, a property owner, advisor. Which role do you enjoy the most?
Whether I'm a broker helping clients buy or sell the property, or I'm helping some of our agents on our team, we have four on our team, and I enjoy serving people. We all ultimately are trying to get to something, whether it's helping somebody buy something or a client selling something or a broker on our team who really just needs help making sure the deal runs smoothly and gets to closing because then they are responsible to help their client. I really enjoy getting through challenges because we always have challenges in every single real estate deal. It's
Yeah.
very rewarding when you can get past those challenges. And so I would say that is rewarding is just getting past the challenges and then really helping people getting what they're ultimately trying to achieve and helping our clients, whether they're trying to build their portfolio or helping other clients that have been property owners for 30 years that are divesting whatever they have. And we have different solutions to help them to avoid taxes, not just through a 1031, but there's other ways of doing this. So it's really just trying to understand what they're trying to accomplish, and then how do I put the pieces of the puzzle together to make it work.
And speaking of challenges, I know you watched Denver transform and grow so much over the last couple decades. So I was wondering, what are some of the challenges you've been seeing in the last few years in the market?
Well, just like your market, Denver was just exploding with double digit returns several years in a row. In the last 10 years, it grew by over a million people. However, at some point, whether it's a stock that's continually going up, like even our stock market today, that's going crazy, or the real estate market, at some point you will get a retrenchment. Things are pulling back. And we started going through that here in Denver last year. So I would say that was one of our bigger challenges that I've experienced, because we were having to go through numerous price corrections. There's fancy ways of saying it, price adjustments or whatever, but the numbers that we thought would work, that were working for years, every year we're coming up with higher numbers to list prices at. But last year we had to go through various price corrections, and just trying to find that buyer pool at different levels was hard. You just kind of have to stick with it and be creative, whatever it takes to get a property sold. The buyer pool is a lot less right now, and it should be greater. And the reason is because, yeah, rates are still hovering in the mid sixes right now. And at some point we'll see rates come down. But there are incentives out there that buyers can use, called a rate buy down, like a 2-1 buy down or a 1-1 buy down, to get that rate down 1 or 2 percentage points. That would take their rate from 6.5 down to, say, 4.5 with a 2-1 buy down. And you're locking that in for a year or 2 years. Well, when rates come down, hopefully I don't know if it's going to be later this year, but hopefully next year, all of a sudden, if we get rates in the fives, it's going to open the floodgates, and we're going to get a slew of buyers out there. And so the competition is going to be considerably higher than it is today. And so that's kind of one of the other challenges, is trying to encourage people that are on the fence to buy or not. Well, just consider doing it now, and we'll try and negotiate something in your offer that helps you on getting that rate down, to get that payment down. I would say it's just been in the last year or two that's been the toughest for us.
Yeah, and the buy down is interesting. I hadn't heard of that. So that sounds like a good option for people that are on the fence right now. Nice. So you had mentioned in our previous call that sometimes these tougher markets tend to weed out part-time agents or investors. Why do you think that happens? And what advice would you give to someone that is going through that struggle?
Interesting. Yeah. Just like anything in life with FOMO, people jump on the bandwagon when things are going well. And again, getting back to a stock, people jump on a stock when it's just shooting straight up, when really the time to jump in the stock market, and Warren Buffett says this as well, is to jump in when everybody else is fearful. Well, 10 years ago, when Brad and I, or actually, no, we've been together now, gosh, 16, 17 years. In fact, when we sold all these duplexes, we kind of felt like we were the kings in West Denver, because we were the duplex guys in West Denver. And after we sold all the properties, a lot of people knew who we were. And we only saw a handful of other brokers that were kind of in our space, and that, call it 2 to 5 unit property space. But then as the market improved and prices are going up, and it was just frothy everywhere, it just flooded the market with a lot of brokers who we never even heard of, and then we're transacting on the other side. And so over time, I think it's just that FOMO thing, that people just jump on the bandwagon because things are so great. But then when the market turns, like it has over the last 2 years, people that have not been in the business very long, they're going to struggle, because they don't have the experience on how to build that client list or get new deals, things like that. And it is the 80-20 rule, where 20% of the brokers out there are doing 80% of the business. And so, yeah, I would say that it's for those that are considering getting in the business, just make sure you have a plan in place with how you're going to get new business, whether you're joining a team, or if you already have a lot of contacts that that you could work with on, whether the real estate investors, or just if you want to be a single family broker. Just kind of, you really do want to have a plan in place, because you can't just jump in here and expect that, hey, you've got one friend that wants to buy or sell a property, then I'm going to get my license and just do this the rest of my life. Well, you might be sitting out there for months and months after that by not doing anything. And so the key is to have a strategy for sure.
So now we're just going to kind of shift into technology side of things. I wasn't expecting you to be into AI and embracing all that AI has to offer nowadays. So why don't you just share your thoughts about it? How do you use AI in your business right now?
Yes. Yeah. It's really interesting because we'd all heard of AI for years when it was coming out and chat GPT and such. And what really caught my attention, it was in fall of last year, as I was mentioning earlier, the market was challenging and we were having to do price cuts and so forth. And I saw this headline that using for realtors using ChatGPT to create CM competitive market analysis for stale listings. And so it was with the Chicago title rep here in Denver. And I attended the class and he actually used my duplex listing in West Denver as an example. And I was blown away the process that he was doing. So basically he took my MLS listing and then uploaded some comps in the area. There was 12 or 13 into an Excel format, uploaded that into ChatGPT, and then just did this prompt that analyzed my property against the comps and then suggested, here's your current list price, but this is where you should be to bring in more buyers. And the the fact that it just analyzed this data and provided that analysis within seconds just blew me away because we as brokers, it would take an hour to go through all that and understand that kind of process. And that really opened my eyes to the power of using ChatGPT, which is what my business partner and I use. I know a lot of other people and agents use Claude and some other LLMs out there, but yeah, I use it. I would say if not every day, every other day for sure. And it's helpful not just to analyze properties like that, but it also, if you have different concepts, so you're putting together an email, different concepts from a client that you need to answer on something. I mean, it can take a 20-minute email down to literally minutes. And then you can even, in fact, I just did this recently. I took handwritten notes from a meeting that I had, took a picture on ChatGPT, and it created this beautiful format and an outline immediately that I didn't have to type and upload. So, I mean, there's so many different uses to it. And, where it's going to go and evolve from here, I think some people get concerned that AI is going to take over a lot of verticals out there, and including real estate, or taking over real estate brokers. And frankly, I don't believe that. And the reason is because we still need human to human interaction. Because why? Because there's a lot of negotiation that happens in real estate. And, not just from setting the price, but it's the inspection part that I was mentioning earlier. And so we my business partner Brad and I do use ChatGPT AI when we were initially working with a client, and we use it to upload the subject property along with the comps, and then we use an app called Gamma Dot app that puts together a very nice, sophisticated presentation to people from data into a nice presentation style. So that's very helpful. And again, something like that to put in PowerPoint would have taken days, in years back. But it's a powerful tool. And in fact, the funny thing is, one of my real estate friends sent out a text to another friend of mine. It was an Instagram post of somebody who used AI. They were somebody who sold their own home, was a FISBO, a for sale by owner, that used some AI LLM to help set the price on the home. And he was excited because he found buyers within multiple offers and buyers within a day or two. And our response to that was, well, AI probably priced it too low, is what happened.
Yeah, sounds like it.
Because AI can only use the input of the data that you have, just like Zillow or any of these other AUM, automated value, or AVM, automated valuation models. That they're just taking a basket of data and saying, based on your square footage, this is what your value should be. It's not taking into context the level of finishes or different improvements or different features that make a property stand out. It's going to be difficult for it to just take a value on an investment property. I mean, it can to a degree, but with an investment property, you're running the sales comparison approach like you do on a single family property, but you're really more focused on the income approach on you're valuing the cap rate and cash return, but using net operating income. There's just a different way of valuing income properties than there is single family. But again, that gets back to the fact that I just don't see AI replacing real estate brokers because we as humans have to intellectualize and take the data through a process. So
Yes, absolutely. I agree. Of course, like you said, the prompting, the input, the data that it has, it's only as good as that, right? So the better your prompting is, the better the data it has, the better the output is going to be. I think a lot of people are scared of technology, right? They almost just want to ignore it. But people are embracing it more and more. And so it's great to hear that the learning curve isn't high. It was very quick to get on, learn, and be able to use it and really make a lot of your processes efficient and more streamlined.
yeah, I would just encourage anybody who's curious about it to attend any kind of class, a live class if possible. That way you can ask questions. This Chicago title rep I would consider is like a black belt with AI, and so I attend as many classes that I can that are relevant to the topics that he is teaching. There's a lot of different helpful tips on YouTube, on just a lot of videos that you can learn. I went to a class on Claude here a few weeks ago, and I mean, everybody in the class felt like the information was going above our heads because the instructor was feeding us so much information. And I'm pretty familiar, I guess, with using ChatGPT. And I say I guess because a lot of the time you don't know what you don't know. There are a lot of features clearly on there that I'm not using, but for what I am using it for, it is super helpful. And I forgot to mention earlier, we use it for MLS descriptions and a lot of other things too. I mean, gosh, that would take 30 minutes or more to create an MLS description that can take you now 5 to 10 minutes. So it's just the idea of how much more efficient it helps. Because at the end of the day, we just want to use our time more effectively, more wisely, just because we want to be able to not be stuck at our computer 12 hours a day. And that's really what it does. And it helps. And the funny thing is, I was at one of my neighbor's house parties here a few weeks ago, and there was a real estate broker that she had listed and sold that neighbor's house. And we were talking about AI, and she was just like, "No, I don't want any part of that." I think she felt like it was just evil and it's taking too much of your personal data and such. And I said, "Trust me, once you get into it, you start using it, you're going to realize, why didn't I do this a lot sooner? Because it is extremely powerful." And I'm just skimming the surface with this. I mean, there's a lot of people that are way a lot more in depth in what I'm talking about here with using it. But, as it relates to real estate, yes, it helps our brokerage business, but I really want to get more into evaluating properties with it. We haven't really done a lot of that yet. Evaluating income properties, that is, taking all the raw data where properties are valued at today and what the income and expenses are, and then modeling that into some kind of AI analysis, which we will be doing that here at some point.
Yeah, well, those are some great examples of how using AI, ChatGPT, just to really help in the real estate industry and those day-to-day tasks. And like you said, helping with reports, really saving you guys a lot of time. Uh, so Jay, looking back, what would you say has been one of your biggest wins or accomplishments so far?
Gosh, well, what really helped jumpstart a business was winning that big portfolio in 2009 for sure, because that brought Brad, my business partner, and I together. And I would say, but even going further back in college, I got invited with a friend in one of my business fraternities to join him up in Alaska to work on the commercial fishing boats. I thought, that sounds pretty interesting. I always kind of considered that. And so I did that. I did that for that summer and the summer after that. And it was a lot of work. And so I worked on a halibut fishing boat and then a salmon fishing boat the next summer, doing seining, it's called. And what I learned out of that experience was just, I don't care how tired I ever am in life, I always have another gear. And the key is to find that other gear to get through whatever challenging situation you're in. And no matter how much it kind of sucks in whatever situation you were that I was in Alaska, and dealing with a lot of different challenges things back then, is just dealing with it and just getting through it. Kind of like this market right now, just getting through it, and just kind of being steadfast that this too shall pass, but just remaining optimistic. And every challenge in life at some point we'll look back and say, what can I learn from that? Or what did I learn? And that, I would say, that's a lot of what I've learned over the years, is that don't let don't get too high and don't get too low. A lot of my friends think I'm just very calm, and I don't get overly excited about stuff, but maybe it could be part of my personality, but it's also just some learning that it's awesome when things are going great in life, but then you realize you could wake up tomorrow and things aren't going as well. But just to realize, what, I'll get through this, and challenges come, but then they go, and just keep fighting on.
Yeah, and I'm sure that has a lot to do with your success, never giving up, going through those challenges, persevering, and I'm sure that's why you built such a successful brokerage and company.
Yeah, yeah, yeah.
Nice.
There's nothing in life that's ever easy, but that's what makes it rewarding at the same point, because you can get through it in most things. And I think you hear of people that are kind of nearing the end of their life, and a lot of the times they say, "Gosh, I just wish I wouldn't have worried so much because I didn't have to." And there are things to worry about, but it's just a matter of just staying focused, persevering, and just remaining optimistic.
So, what would you say you're looking forward to most in the next few years? What are you currently focused on right now?
One thing that I wish I would have done when rates were considerably lower, when they were, when the Fannie Mae rate was in the around 3% range. And I did acquire, and I have mortgages today on some of these properties in the fours. So I was able to lock in good rates back then. But I wish I would have been a little bit more aggressive on rolling out or doing a 1031 exchange in maybe a couple of duplexes into like a 10 unit or a 20 unit, or a strip mall, or some other kind of commercial building of some kind. But again, you can't look back. You just got to continue to look forward. And I think the market right now, like I was saying earlier, is creating more of a buyer's market, or buyer's opportunity. And so what I'd like to do is roll out of maybe a property or two into higher dense units. I don't know that I want to do a 20 or 30 unit, maybe something that it could be a 5 or a 10, maybe a 20 if it comes around and it makes sense in the right area. But I would say that's ultimately what my plan is on the investing side. Now, with our brokerage, we have 4 agents with us. We never are really trying to grow this into a 50-person or 100-person brokerage. We just have brought on like-minded individuals that are investors themselves or want to be investors. And not all of our agents do 100% investment properties. Some do single family. In fact, we do as well. It's not all we focus on. We do single units as well. And so our goal is not to ever grow the business or grow our company to be this massive company. It's just, let's bring on a few people that hopefully have some experience. I mean, that's kind of more what we're focused on now. We're not any new agents that are new to the industry, just maybe somebody who's transitioning, who's been with a firm for a while, that really wants to be more investor focused, or just feels that we're a better fit for them, which we did with one of our agents here a couple years ago. And so a goal for our brokerage might be growing by another, who knows, it could be up to 5 people in the next few years, or less. And then just continually just doing the right decisions, whether it's in personal investing or whatever. I feel like I've been positioning myself well in the last year or two, just investing, whether it's in the stock market or some long-term kind of stuff, things like that. Because when I was a stockbroker, it was kind of sad. I'd call in some people that were later in life. It could have been, 60s, 70s, or people that are kind of getting near retirement that just didn't have a lot, less than 100,000 in their retirement, or even less than that. And to me, that's concerning. And the key is to just really focus on being diligent. And whether you're young and in your 20s and 30s and you're just socking away, it could even be a couple $100 in an S&P index fund, an ETF or something like that. Or if you do get enough money and you want to buy a piece of real estate, like I said earlier, just consider buying a duplex, living one side, renting out the other, kind of like what I did with my triplex. And over time, you'd be shocked at how well you do. You know, you buy a duplex today that in 20 years will be worth, it could be worth $1 million. So you never know.
That was just great advice, that you have so many strategies in place and just all the insights you've given a lot of people that, one, haven't invested, but maybe now is a good opportunity to start looking into things like that. So that way in the future, they're glad that they did this.
Yeah, it's surprising just what time does when you invest right, whether again it's in some kind of stock market investment like a fund or an ETF or in real estate. And I know there are stats out there that show like a 40-year-old, let's say that had bought a property 10 or 15 years ago versus somebody who just rents, and the delta of their net worth is staggering. And it's just because somebody who just rents most of their life, unfortunately, they don't invest in anything or in real estate in particular that could have afforded them a really nice start on their net worth. So that's the key, is just at some point just starting, and hopefully you're starting earlier in life.
Yes, and I think that's an important conversation, parents should have with their kids as well because it's just something you don't know and realize, and like you said, you look back and think, "Why didn't I buy something 15 years ago?" In a lot better situation.
Right. Yeah, exactly.
Hey, thanks so
Yeah.
much again for
Well,
just coming on, sharing your journey with us, gave us so many great insights, and I appreciate you sharing everything you have with us in the audience.
I'm happy to contribute, Michaela, and anybody can reach out to me. You don't need to work with us necessarily if you don't want to. Just feel free to give me a call. I'm happy to walk anybody through real estate investing, any questions they have. So happy to help out.
Awesome. Thanks, Shay. And yes, we will have the information on the screen and also below in the description. So that way you can reach out to him and get in contact with him if you need to. And thanks again to our listeners for tuning into the Deal Flow, and we will see you on our next episode.